Good afternoon, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hopefully you guys had a great day in the markets and a beautiful long weekend as well. And in today's action, guys, well, after 9 consecutive days of upside pretty much in the S&P 500, we got a first big red day of retracements. And after last week's videos, we were commenting on the fact that we were seeking for the next negative catalyst that could possibly put an end to the very nice bull run that we've been on recently. And with positive reports out of inflation as measured by CPI and CPI, and a positive non-farm payrolls jobs report, the only logical thing that could possibly stand out in the next coming week in order to bring the markets down as a negative catalyst was pertaining to the tariffs and the ending of the 90-day tariff pause date, which tentatively, which would be July the 9th. And as a matter of fact, today we actually got news that Trump has began sending out letters, a lot of letters to be specific, Trump announcing steep tariffs on 14 different countries starting August the 1st. So extending the deadline from July the 9th all the way through August the 1st. But we also had an indication of this last Friday. But last Friday, the markets were closed, but the futures definitely did react to it. Pay attention to this right here. This is the close coming into the Thursday prior to the holiday. These letters were announced on the Friday session, but I didn't see you guys because you could clearly see what the market's reaction was to that over the course of the Friday session. On the Sunday futures, we got a bit of a pop, and today the markets at the open started dropping. These letters were sent out in or around noontime Eastern, and the markets unfortunately just unraveled thereafter as more and more letters started coming out. So of course, on the watch for this week, as we know that many letters will be sent out in the near-term future in the next 2 days, we will be looking at how far this consolidation can possibly bring us. Good thing though, the bulls are still working with a lot of space. So in today's video, we're going to do a few things together. Number one, we're going to be going over that piece of news specific to the tariffs and look exactly which countries were targeted and by how much. Thereafter, guys, we're going to take a look at our major technical analysis rundown on our major stock market index. It was a broad market day of decline, wasn't much rotation. However, we'll take a look at all the indexes right here and see and derive levels where we could possibly look for more swing trade entry longs. Thereafter, we'll do the same thing on our big tech list. Take a look at every single one of these big tech companies on the list and derive similar locations where it could be interesting to load up some swing trade longs. We know that the markets have been running very hot and in a very extended fashion. Now it's the time for a pullback. So now is the time where we should be planning for some trades or for some long-term portfolio entries. And after that, guys, we'll take a look at the biggest gainers and losers of the day. Of course, there are many stocks that were read today, some more than others. So we'll take a look at a few of the biggest losers of the day and a few of the biggest winners of the day as well. And no, I'm definitely not going to forget about the Elon Musk and America Party news, which affected Tesla stock today. We are going to tackle that when I cover the Tesla technical analysis at the later portion of the video. After we're done with the biggest gainers and losers, I will show you guys a few of the swing trades that I was able to make today. We came into this week with full buying power. Yesterday, I closed out, last week, I closed out a ton of trades, was telling everybody I want to come into this week with the July 9th tariff deadline with an absolute ton of buying power. We did, and now we were able to get some trades off. So I'll show you all that at the end of the video. So without further ado, guys, let's jump right into the action, shall we? So the SPY down 0.75%, a little bit more in the after hours because of these 14 countries, 7 were released during market opening hours and 8 were released after the close. So which is why we have a bit more of a decline in the after hours session, but I digress. SPY down about 0.75%. The QQQ's down 0.75% as well. And taking a look here at the heat map, you will see that not many sectors were spared at all. Only consumer defensives and utilities making it out of the bloodbath. Big tech largely pulling down, led to the downside by Tesla, of course. Financials not having a good day at all, whether that was insurance, banks, or financials, and healthcare as well pulling back. So it was a broad day of market decline. Moving on to the one-day relative, you can see that even better to where consumer defensives and utilities were the ones least affected by today's decline, and the most energy, consumer cyclical, financials, and technology and healthcare right there in the middle. But a lot of sectors close to 1% declines and some over. On the 1 week relative, we still stay fairly balanced with a bullish leaning bias. And that is very clearly because we've had a very nice expansion leg. So there's still a lot of gains on the table, but we might just be looking for some higher lows before possibly resuming the trend to the upside. So before we get into more technical analysis and more momentum analysis, let's take a brief look at the tariff headlines and what exactly they entailed. Let's have a look. Trump announcing these steep tariffs on 14 different countries. As I said, half of them throughout the day, half of them in the after hours, and the deadline pushed back to August the 1st. Now, obviously, this is probably to stimulate more negotiation talks. We are not quite sure whether these are going to be the final tariff rates, but it's meant to be probably an acceleration tactic. Countries have now had 3 months to negotiate, and possibly President Trump, not being happy with the speed of negotiations, is trying to kind of wrap things up, giving an extra 3 weeks in terms of a deadline. And if not, well, here will be the tariffs. And a lot of these are exactly similar, somewhat lower, but pretty much similar to the same reciprocal tariffs that were announced on the board on the infamous Liberation Day. So let's move into it, shall we? So Laos, 40% as opposed to the 48%. On the right-hand side, you'll see this is the effective tariff rates that were announced on April 2nd, Liberation Day. Myanmar, a little bit lower, 40 versus 44. Cambodia, 36% versus the 49 announced back then. Thailand, 36, which is the same as they got back then. Bangladesh, also relatively similar, but slightly under. And you can see it kind of continues, right? Serbia, Indonesia, Bosnia, a lot of them, guys, none of them are actually higher than Liberation Day. If anything, a few of them are moderately lower. The biggest ones, though, of concern are Japan, still at 25%. That is 1% higher than April the 2nd. And we also have South Korea at 25%, which is exactly the same as it was back on April 2nd. But for the most part, a lot of these countries, guys, are a little bit under, with others being significantly under, like Cambodia is 13% under overall. So keep that in mind. But the main concern over the next 2 days is going to be the larger trading partners. What's going to happen with Mexico? What's going to happen with China? We know there's a framework for a deal, a handshake deal, so to speak. What will be the finalized details? That's why the markets, although they were down today, probably did not react too harshly, because we don't have any of the final tariffs numbers in terms of impositions on the largest trading partners. Today, we got one in the name of Japan. Vietnam, we already know that there's a closed deal that was announced last week. We covered that on the channel. And South Korea down here at about number 7, that was also announced today. So 2 of the major trading partners are out of the way, but no Mexico, no Canada just yet. And we're still pending other ones such as Taiwan, Ireland, India, Italy, the UK, which we have a framework with already, Switzerland, France, and Malaysia. So keep that in mind, guys. Malaysia is down there. They actually got one today, 25%. So we'll be curious to see if they come to the table, but you really want to pay attention to some of the larger trading partners to see if there's going to be any deals coming in the short term. Now, in terms of what was said today overall, well, obviously you guys must understand that it was largely about the tariffs, but we'll cover a few bullet points here. All the letters say that the blanket tariff rates are separate from additional sector-specific duties on key product categories. Sectoral tariffs will be something to look out for in the next 30 days as well. We also have transshipping tariffs. Goods transshipped to evade higher tariffs will be subject to the higher tariff. That is something that China was doing a lot of, right? Exporting goods to Vietnam first, and then having those goods, right, brought to the United States, which kind of avoids a direct tariff. That is called transshipping. So all of these countries, if they are found to be doing transshipping, 40% extra for the most part. Moving on further, if for any reason you decide to raise your tariffs, if all of these countries decide to raise their own reciprocal tariffs after this most recent round of letters have been sent out, then whatever the number you choose to raise them by will be added onto the 25% that we charge. That was in most of the letters. Obviously, it's not 25%. It depends per country, right? So, if let's say Indonesia here chooses to raise their own by 10%, well, 10% will be added on top of 32, right? This is just an excerpt from one of those letters. If the countries eliminate their tariff and non-tariff policies and trade barriers, then the US will perhaps consider an adjustment to this letter, right? These tariffs may be modified upward or downward, depending on our relationship with your country. Now, obviously, everybody knows that if negotiations are to be had and deals are to be made, well, then the tariff rates are probably going to be lower than what has been stated in the letters. But of course, as I said earlier, it is probably just a negotiation tactic to get people to the table a lot faster. Remains to be seen what's going to happen over the next 30 days. But that was the major news that impacted the markets today. I don't really believe, if you ask me my opinion, guys, I don't believe we're going to revisit the April lows overall. You know, we've priced in a lot of the potential damage so far. The macro data is not yet eroding, and the timeline in terms of the effect of the tariffs is going to be pushed back. We've literally just had 3 months worth of pauses with only a 10% effective rate. If the reciprocal tariffs announced without the pause back here were to have been maintained, the impact would start to be felt around now. However, because there was a 3-month pause, you have to push back the timeline of the tariff impact overall. So the tariff impact will probably be starting about 30 to 60 days later than the final effective rates that come on August 1st. So please keep that in mind. We'll take close attention to how it affects the markets in the near-term future. But as of right now, you can see, although there was some damage today, it's definitely not reminiscent of a lot of the volatility that we were getting in or around Liberation Day, although some of the rates are largely similar. So keep all that in mind. We will stay, put with our buying power right now and play the dips as they come, as we do understand that the longer term bulls are in control. Seasonality is also in our favor, and we are coming into earnings season within the next 2 to 3 weeks. That being said, that's everything for your quick little news recap on the tariff. Spent a bit more time on it because it is, of course, important. Now, that being said, in terms of things we have to look out for the week, guys, not that much. In terms of the macro, we literally have nothing this entire week, only the FOMC minutes, but that's just a quick recap of what was said in the meeting a few weeks ago. Other than that, no macro. We also have no significant earnings to speak of. Special shout out to Delta Airlines, which is reporting on Thursday, might give us an indication into travel patterns of the consumer right now, but no major corporations. That is going to start next week when some of the major banks start reporting 2 Fridays from now. Not this Friday, but the Friday after, which leads us into our seasonality analysis. July is supposed to be one of the more favorable months. If we can get all of the tariff headlines out of the way by Wednesday, that could possibly consolidate the markets a little bit. And then we're going to move into the earnings moves for the rest of the month. Earnings should be a positive catalyst for the market, but remains to be seen, of course. Guidance so far has been not too bad, as the impact of the tariffs has not yet been felt, right? So that being said, guys, those are things to look out for in terms of our market performance today. In terms of our fear and greed index, we are still at extreme greed, although coming off the highs that we saw on the Thursday session, which was a 78 read. We're pulling back a little bit, but it's of course very normal after one day of big decline. And I'm pretty sure a lot of you guys have been waiting for the dip opportunities. So now it's time to plan. And then when it comes into your ranges, it is also time to act accordingly. That being said, who is in control of the charts right now, guys? Should be fairly obvious. The bulls, right? So daily beautiful upswing right now on the SPY, looking for a higher low. We are finally into consolidation. We were waiting for that one bad piece of news that could possibly unravel this move, and it's now officially here. Anything above 592 is looking for a higher low. For possible further trend continuation, pay special attention to how we come down into the support range, 609 down to roughly 597. You would like to see the bulls play some defense and slow it down into there. And even if we set a daily downtrend in motion over the next week and a half leading into earnings, I'll remind you who's in control of the longer term timeframes. It is, of course, your weekly bulls. The weekly uptrend still looking very healthy right now. Anything above 592 would just be looking for a weekly higher low for possible further trend continuation. Keep that in mind. The monthly candle closes, as we covered last week, were very bullish. And with seasonality, I would not be surprised, especially if earnings are good. We might get a little bit of volatility early July, but I'm pretty sure the end of the month could be quite good, especially since big tech earnings probably will be pretty nice as well. Moving on to the QQQs right now, also down 0.75% today, but of course we also understand the bulls are in full control. The higher lows are set right now at around 544.5. In the event we unravel this level, guys, it'll be a loss of a very beautiful daily uptrend, and we might just be going into a bit of daily consolidation or a daily downtrend event. If that does occur over the next week and a half of trading, just remind yourselves who is in control of these long-term charts. It is, of course, very clearly your bulls again, with the higher lows being planted at 523. Very nice breakout retest pattern possibly in motion, and support stays put 536 down to 523. If we see a move down into this support level, this is where you're going to be wanting to look at individual stocks, because if the markets pull back 3-4%, individual stocks can pull back 6, 8, 10%, depending on which type of stock you're looking at, value or growth. So individual stocks might just be coming into some short-term oversold levels as well. And with a lot of individual stocks also benefiting from weekly time frame control, just keep a look at them. I'll show you guys as many as I possibly can over the next week when we move into more consolidation. Moving into XLF financials right now, financials down about 0.96% and another 0.32 in the after hours, but we obviously know who's in control here. It is your bulls. Beautiful breakout to the all-time highs right now. You're just looking for a higher low. Gorgeous daily uptrend on any consolidation. Anything above 49.40 is going to be looking for a higher low, possibly for more continuation. Now, that being said, we can consolidate into the bank earnings. I'll remind you, bank earnings start next Friday and then continue into the following week thereafter. So it could just be a case of consolidation and then maybe positive bank earnings. We're not expecting any negativity from the banks overall, especially due to the fact that the Federal Reserve has lowered their requirements for liquidity reserves, which could boost their efforts to possibly buy more bonds and things of that nature, right? We know that when banks have less liquidity requirements, they can obviously utilize the money a bit better, which should boost total returns for them. That being said, in terms of the weekly charts right now, looking quite solid overall. Nice breakout of the bull flag right here, and a weekly uptrend has now been made. So anything above 49.90, just looking for a higher low for possible further trend continuation. So the timeline will be waiting for the bank earnings overall. Moving into XLV healthcare right now. Healthcare obviously suffering the same as the rest of the market. Very unclear price action right now. We are trapped at the bottom end of a range. We know the bulls have been trying their best with some nice engulfing moves, trying to get the daily uptrend back, but it's tough with days like today. Of course, the clearest time frame, in my opinion, are the, well, two time frames, the weekly and the monthlies. Overall, we're looking for a bit of a tight accumulation range right here and try to go for the breakout. The weekly MACD is still looking good for healthcare, but it's a bit of a slow trade overall. Healthcare is not known to be a fast mover. The monthly shows the clearest price action, in my opinion. Monthly downtrend, trying to set some lows right now and trying to recapture a bit of the momentum here towards the end of the year. I'm still a fan of playing healthcare overall, but it might be a slower trade than some people might expect, so keep that in mind. On to semiconductors right now. Semiconductors losing the most today, 1.36% to the downside. But where are we, guys, on SMH, right? We are still very close to the all-time highs. Not much has been lost on this chart right now. We are still in the context of a very nice daily uptrend. If you lose the low here, 272 over the next few days with more tariff announcements, daily uptrend is lost. You open the door for the daily downtrend, and you open up the door as well for a bit of healthy weekly consolidation. And the key word is healthy here because the bulls maintain absolute full control of this chart. Very clear breakout of your prior, well, range highs and all-time highs. So any consolidation, especially consolidation that brings you close to the support range 260 to 250, could be a nice opportunity to build further positions in your favorite semiconductor stocks, right? We'll take a look at a few of them, but how you correlate the index to individual names, just look for their own relevant levels. We'll cover NVIDIA a bit later, but NVIDIA, 150 back to 140, right? Take a look at Broadcom. Broadcom also broke out from the highs. If they can retest maybe 250 down to 235, right? And other things of that nature. Micron with a fantastic breakout now might be just looking to retest the lower bounds of the 110 to 100. That is how you correlate the index to the individual names. You should always do a top-down analysis. Index first, and then look into the individual names and see how they correlate together. Moving into the Russell right now, the Russell also down 1.5%, no surprise there. Beautiful daily uptrend, however, on the Russell, still looking for a higher low. Anything above 212, let's call it, looking for a higher low, possibly for further uptrend continuation. However, if we get stuck and unravel this move and go into a daily downtrend, just understand that the bulls have just reclaimed a very beautiful area of support below us, 217 down to 208. That being said, the weekly bulls are in control of this chart, similar to most other indexes. Your weekly bulls are in control, so just watch how they backtest this region. I wouldn't be opposed to selling some put options down below in the lower 200s, although the Russell is not my favorite place to be right now, just because they really need a rate cutting cycle, start getting the actual lift that they deserve. So far, they've been carried up with overall broad market strength, but you haven't seen the outperformance that the Russell is sometimes known for. And, you know, if you're looking for that, you really need rates to come down. Now, if we take a look at some of our minor sectors here, XLP consumer defensives, they were one of the bright spots in the market. Not all names were green today, but a lot of them were. Keeping in mind, we are still consolidating above a beautiful range of accumulation here, 80.75 down to 79.7 is that range. Might just be looking for a breakout. So if you are in any consumer defensive names, I don't see any reason to possibly sell them right now. We are still pending possible rallies to the upside as we move into the later stage of the year. Utilities actually up 0.21%, almost the same chart as XLP. Consolidation above a range, accumulation phase, and now looking for the possible breakout. Utilities is also looking good. Real estate was down today 0.77% because we had an uptick on the bonds, so real estate still remains somewhat muted. 41.4 down to about 39.19 is that range. They are also trying to consolidate above a support range and try to go for the breakout. One sector that tried the breakout last week but has since been pulling back is ITB, the home construction ETF overall. Not looking too bad at all. Weekly expansionary move. First close above the 12 weekly EMA. It's been a long time since they've done that, all the way since December. It's now been roughly 7, 8, 9 months of pullback on the monthly timeframes, decent monthly close. It might just be a sector that you can look out for in the near-term future if you're interested in real estate. And lastly, energy. Energy was down 0.9%. Energy, not one of my more favorite sectors to play, but overall, we are still trying to claim this resistance range and break above it and render it into a nice support zone overall. So keep that in mind. That's it for your minor sectors. Now, in terms of the VIX, well, we knew that with the VIX very low, as I was saying last week, any negative catalyst was going to give a little bit of an upswing on the VIX. But you can see here how much importance the market, gave to the tariff announcement today. Definitely not reminiscent of what we had back here. Not even the lead up when we started all this drama in February, right? Not a significant uptick. I'm not saying that's the end of the pop on the VIX. You could see a little bit more, but the VIX only up roughly 2% today. So pay attention to that. If you do get some further rallies on the VIX, it's going to be great to give us some good distance if ever you're selling options such as put options below the market. Take a look at the dollar right now. The dollar still remains weak, although it did pop up 0.57%. This is going to be one of the catalysts potentially that makes big tech have a good earnings season, just because now we will benefit from currency tailwinds and no longer headwinds. A lot of big tech companies and companies like Visa, MasterCard, a lot of the international companies, when the dollar is high and they make their revenues and they have to bring back their revenues that they make in euros and pounds and other foreign currencies, when the dollar is high and those currencies are weaker, it costs them a lot of money to bring them back to dollars. As a result, a lot of these companies for the past roughly a year and a half, 2 years almost, have been facing currency headwinds. Their EPS is not what it otherwise would have been with a sustained weak dollar around the $100 mark. Now, for the past 3 months, the dollar has been very weak. This could be a first quarter in a long time where you might actually see a bump in EPS because of the currency tailwind, right? When they bring back their earnings from abroad, they will get more dollars, US dollars to be specific, which could give us a nice little bump in EPS. So that'll finally be a tailwind for some of these companies. And we also know that the consumer, although a little bit weak, we know the consumer has been weak for the last 2 years, they have not fallen off a cliff just yet. They're still spending roughly, right? Not strong, but they're still spending averagely overall. So keep that in mind. Moving on to the yields. Well, yields obviously had a big uptick today, 0.8%. A bit of volatility in the markets today, and the 20-year yields as well, 1.05% to the upside. Now, we know that Trump did the tariff pause when the yields back here were clipping into the 5% range. That's when we first got the tariff pauses and a lot of language that was being changed by the administration, trying to be a little bit more soft in terms of negotiation expectations and stuff like that. But now the yields were coming down in a very nice fashion. And now in the last 3 days, sadly, we have upticked. We've pretty much undone the last 2 weeks of downside in 3 simple days. So I've said it once, I'll say it again, guys. The bonds are going to be a very complex trade, especially with the hot jobs number that we got on Thursday, right? It just doesn't give the Fed the urgency to cut interest rates. And as a result, your longer term yields will be higher and your longer term bonds will still be an unfavorable trade overall. It's good to be building a position down here, but as I've said many times on the channel over the past 2-3 months, it's going to be a very slow trade, a very slow accumulation phase. You will be looking for the eventual expansion here, as when rates come down, if rates come down over the next year by a full percentage point, there's no way these long-term yields are going to stay as high as they are right now, but you may need to be a little bit more patient than not. Now we're going to drop down into our gold analysis. So gold roughly, not having the worst day in the world, but still on the Monday session, guys, gold was down roughly almost 0.5% before gaining back a lot of that move throughout the day. So overall, not the worst look for gold, but gold has literally been trapped in an accumulation range for a very long time, for the better part of the last 2 months. We're trying to go for the daily trend expansion right now, but it's still unclear if the bulls are going to be able to actually get that done. It's been sideways. We got a nice breakout on the weekly. Higher lows are set and going for the expansion. There still is an expansion trade right now, guys. The lows of today are possibly a nice stop loss area. We were looking for the higher lows to be set and for the bulls to recapture the short-term timeframes. Seems as though they want to go for that right now and go for the expansion. So if I had to take this trade and set a stop loss, a very tight stop loss would be below here, roughly below 32.95, and going for the expansion targets of 34.50 and then all-time highs 3,500. If you wanted to go for a more large stop loss area, it would be 32 32.32 essentially, 32.30, and then you'd be targeting the first take profit of 34.56 and expansion as well. So two different levels, depending whether you're going for short-term or long-term expansion. Definitely not looking the worst, but still, price action very choppy over the last 2 months and somewhat soft, especially after this tremendous rally that gold has recently had. Moving on to our Bitcoin right now, Bitcoin down about 0.92% today. The bulls unable to break and close above the 110,000 mark. It's been an ever elusive mark for the bulls, right? Barely breaking above it a few times. And whenever it does happen, we always get something in the markets to kind of pull us back. All that being said, the bulls are still not looking too bad. However, we now have the higher lows. If they crack below, it's a daily downtrend. And we know that the clearest time frame right here is the weekly time frame, right? This is a bull flag overall. It's just been consolidating above the all-time highs. Support stays put 105.5 down about 101.5. So keep that in mind. Any back tests into this region could be a decent area to build some more longs, but keep in mind, if you're taking this swing trade for the expansion, which would be 115 to 120, well, if you want to trade it with a stop loss, you would have to logically set your stop loss down below here at about 97,000, now the break of 98K, let's call it, because unfortunately that would invalidate the thesis. That would be the weekly downtrend setup and would unfortunately be monthly consolidation for your bulls. So please keep that in mind if you are trading Bitcoin. And with that being said, that's the entire market rundown. Now let's dive into some big tech stocks, shall we? All right, so we're going to cover these quickly because even though we got a red day today, guys, not much has changed, right? Apple, still the exact same structure as we've had recently. We've talked about this for a while. Coming into resistance right now, beautiful daily uptrend, but resistance stays put, 221 down to 210. They reacted nicely from it, getting rejected from the 200-day EMA a couple times, now 2 days in a row. Might just be looking for a higher low at this point, anything above 199. Looking for a higher low for possible further trend continuation. If I had to take this swing trade again, the entries would be down here around 204, 205. Stop loss would have to be there because if we unravel this entire move, that's just invalidation, and you might just be looking to retest support 196.5 down to about 187.63. In terms of the weekly is still trapped in a range. I know it was a very nice move. The bulls getting a lot of momentum in their favor right now. The weekly MACD is crossing to the upside, so it's not looking too bad. So if you have a longer duration thesis on this one, going with the weekly and monthly timeframes, any dips would indeed be for buying for the expansionary legs of Apple. We know that the monthly time frame has been consolidating for the last 5, 6, 7 months, and now you just might be looking for a monthly upswing, especially coming into earnings. So if that's the style of trade that you want, well, you'd have to be accumulating a bit slower into these lower levels and go for the actual breakout trade, which is something like that. Moving on to AMD right now, AMD down about 2.26%. Same concept as the rest of the market, essentially. We know that AMD was coming into resistance. 145 up to about 153 was that resistance range. We know that the bulls controlled the daily time frame, which unfortunately they have now lost, right? Low, lower high, lower low. Daily downtrend. Is it the end of the world? No. We're coming into support right now, 132 down to 120. And overall, if you lose the daily, you have to go one time frame higher. Look at what's happening on the weekly. We know that any loss of the daily uptrend, as we saw today, would just be looking for weekly consolidation. It was a beautiful expansion leg from AMD, and now we are just consolidating on the weekly time frame. So watch how the bulls react into support. If we're looking to play this one, short puts is going to be the type of trade that I favor. Anywhere down below here, 130 to 120, in my opinion, is not the worst proposition because at the end of the day, you're just looking for a weekly higher low for possible further expansion. We know the longer term bulls are indeed in control. And with this June candle close, it's looking very good for the bulls' capacity to put in further gains throughout the rest of the year. The monthly time frame is also finally, guys, after like almost a year, 9-10 months of negative momentum on the monthly, we have now started to curl higher. Couple that with the fact that the valuation below 140 is still very manageable, and I wouldn't say we're too late on AMD at all. As a matter of fact, this would be a nice retest area that I want to play, and I am playing. I did take a trade on AMD today, which I'll show you at the end of the video. On to Amazon today. Amazon, oddly enough, was able to protect its gains today, ending the day roughly flat. That being said, Amazon, similar to other names, is coming into resistance. 228 down to 218 is the resistance range. That being said, the bulls are in control of the daily uptrend, but if you get no new highs and tomorrow's a red day, and over the next few days we crack 218 to the downside, that would be daily downtrend, and that would also be synonymous with weekly consolidation. Good thing the bulls have tons of space on this Amazon chart right now. They're in full control, and they would just be looking for a weekly higher low, get some more momentum down here, accumulate a bit more, and then try the resistance range again. That's if they just don't smash through it in one clean shot. But if the overall markets consolidate, I would not be surprised if Amazon does something similar. The higher lows are down here, 207.31. I'm still a big fan of playing Amazon on the pullbacks, especially for accumulating some shares for a long-term portfolio. So that might just be something that I do if I can find it again below 215 and down to about 210. No swing trades for me from now, though. Moving on to Google right now. Google down 1.66% overall today. Not yet giving up this daily uptrending the uptrending move that they were trying to get done, right? We did not make a new high, never broke out and confirmed the daily uptrend. So that being said, daily downtrend, engulfing move, you were looking for the conversion, did not happen. That being said, they can still get it done by creating some form of a tightening range and then breaking up higher. But if we break lower, sadly, another daily downtrend, and unfortunately, you will go right into weekly consolidation right away. We never made it up to the resistance range, which was 185 to 191. That being said, the Google longer-term bulls are still in control. The chart's been very choppy, but above these lows right here, 163.13, just looking for a weekly higher low for further trend continuation. My favorite way of playing Google right now is the same thing that I've been doing over the past 4, 5, 6, 7, 8 weeks at this current time, guys. Playing short puts below the market. I'll be looking to sell puts on Google in the lower 170 range. Matter of fact, I took a bit of an aggressive trade on Google just because I don't mind being assigned the shares, and I'll show you guys that trade at the end of the video as well. Moving on to Meta right now. Meta down about 0.09%, literally flat in terms of Thursday's pricing, excuse me. However, if you flush this low right here, talking about 712.47, that will be a daily downtrend coming down into the most recent range of consolidation, which is 706 down to 683. And you guys know the drill by now, right? Daily downtrend means one simple thing and one simple thing only. Weekly consolidation, right? That being said, the weekly higher lows are still set at about 681. So the bulls benefiting with a lot of space. They could do something like this, and I really would not be surprised. However, Meta and all the big tech stocks pretty much have earnings coming into the end of July, so that is just something to factor into your analysis overall. Meta right now for a long-term portfolio buy, I mean, it's okay. It's not the best at 720, a 28 forward price to earnings and above a 2 peg. But still, it's not the worst. I think Meta's going to do the really good in the next 2-3 years in terms of just upside expansion of their fundamentals. However, we need to be sure that we're getting a good price for Meta. And for me at this current stage, guys, I would really like to add Meta shares. If I could find like in the low 680s, that is where I would consider adding again. For now, I'm just holding what I have. Onto Microsoft right now. Microsoft also down about 0.22%, but you can barely see it on this chart right there. The bulls are still in absolute full control. Daily higher lows are set with the lows of last Wednesday, roughly 488, 487. If you see a breakdown below without new highs, first daily downtrend on Microsoft since all the way back here. So it would be significant. Daily downtrend and the loss of the 12 EMA would show you that possibly we're heading into weekly consolidation. And this chart definitely does need it, right? We're kind of overbought on the weekly, which is not something that Microsoft does all the time. It's literally been an entire quarter of just Microsoft going up and up and up every single week. So we know that if daily downtrends start on this name and we go into market consolidation with some of the tariff drama or stuff like that, you could be expecting a bit of a pullback. The likely area, in my humble opinion, is maybe a retest of the highs right here, 467, first stop. That would be in line with the 12 EMA on the weekly. It would be a steep drop on Microsoft of about 6%, but it is indeed possible. It would just look very logical on the charts to have a bit of a pullback before maybe going for more expansion into Q3. Microsoft's still one of my favorite companies to hold, but I'm not buying any more of the stock right now as the valuation in around 500 is at the top end of the range. Moving on to Netflix right now. Netflix down about 0.58%. Same concept though. You can barely see it. They're literally just doing the same thing that they did at the midpoint of last week. That being said, still into daily consolidation, guys, right? Daily uptrend is very nice on Netflix right now. Daily consolidation is still underway. They are looking for the higher low for possible further trend continuation. But if you get something like this, the daily unwind here, daily downtrend, you know that we're into weekly consolidation for the bulls. The good thing, they have a lot of space though. Anything above 1183 is looking for a weekly higher low for further trend continuation. If you give back too much, and now we're projecting, right? We don't know if this is going to happen because Netflix has earnings, in 2 weeks almost, July the 17th, right? So not that much time before Netflix earnings, but if they unravel after earnings, coming down, this is the next support, 1215 down to roughly 1185. I'm not buying any more Netflix shares up here. I'm very happy to hold the ones that I do have, but the valuation as well, similar to Microsoft, is at the top end of the range. Moving on to NVIDIA right now. NVIDIA down about 0.7% overall. Not the worst day for NVIDIA, considering that many stocks were down 2, 3, 4, 5% today, but still pulling back from the all-time highs, but the price action is still pretty healthy in my humble opinion. At this point, any move lower is looking for a new higher low. Anything above 151, looking for a new higher low for further expansion. In the event that you cut this low and set up the daily downtrend, I'm just giving you guys the likely scenarios that could happen in the next week and a half of trading. If you do something like this, a daily downtrend, right? You're just looking for weekly consolidation. It's very, very, very simple, right? The bulls are in absolute full control of this chart. They've been running very hot the last 8, 9, 10 weeks in a row. If you get a pullback, where's the likely area that we could pull back into? Well, the prior all-time high range that used to be resistance, which is now support. Talking about 150 down to 145, and the 12 EMA on the weekly will be curling up. This would be a likely retest and re-entry location for new longs, and I'll keep you guys posted for whatever I do. If we come back into this area, I'll probably be looking to sell some puts below the market at that point. Maybe even starting some new swing trade longs from the support range. So keep that in mind. NVIDIA right now above 150, 158 right now. The valuation is not cheap, not expensive, but it's tough for me to add a full-size position. I would rather play something like a pullback. Moving on to Tesla right now. Tesla, down almost 7%. And we got to talk about this, right? Elon Musk says he has formed a new U.S. political party, the America Party overall. Now, he actually did a poll. This is something that he was talking about for the last 2-3 weeks, as we know that he's have a big falling out with President Trump, as was seen during this candle back there when they went at it on Twitter together, right? And now, right, after several weeks of deliberation, he put out a poll to his followers, asking them if they would want him to start the America Party. And the vote, from a vote of 2-1, was a resounding yes. As a result, Elon Musk followed through with it and started the America Party. Now, of course, Tesla shareholders are not that happy with that overall. Some people might be happy, but you can tell from the price action today that a lot of investors are not happy, and for one single reason. The focus of Elon Musk for the last roughly 1 year of time at this point has been more oriented towards politics than it has been protecting the brand and expanding Tesla overall. A lot of his focus has been on previously the Trump campaign, and now into his own new party. And to be quite frank with you, I've spoken with a lot of Tesla investors. I myself am a Tesla investor, although my position is a lot smaller than it was a few years ago. I've made a lot of money on Tesla, guys. But if you want to ask me my opinion, I would also prefer if Elon Musk took a break from politics and started focusing on Tesla again. Now, of course, I'm all for, what Elon Musk is trying to do, right? I'm all for him trying his hand at politics, and obviously for freedom of speech, and for trying to provide another opportunity for the American people. However, this does come at the expense of the Tesla brand, of the perception of the brand as well. And we've seen many of those events transpire over the last 6, 9, 12 months overall. First, when he joined President Trump's team, he obviously alienated a lot of his demographic that were more left-leaning. Thereafter, when he had a falling out with President Trump, he alienated some of the right-leaning customer base that he had in the US. Additionally, he alienated some of his European demographic when he chose to comment on political things that were happening within the European continent. So it seems as though every quarter now, Elon Musk is unfortunately alienating a portion of his demographic of customers for his Tesla brand. That is not very good. Now, people can argue that Tesla is a long-term thesis play, and I agree. That's why I'm holding a portion of shares that I used to have, because I want to see if they're able to deliver on the long-term promise of robotics measured by robotaxis and, of course, Optimus. So I'm still holding. However, I'm not going to lie, guys. I, too, am getting a little bit exhausted about the external factors right now, namely politics, that have been affecting, namely Elon Musk's politics, that have been affecting the brand so far, right? It doesn't make me extremely comfortable as a shareholder that Elon Musk is devoting probably more than 50% of his time to politics rather than focusing on the expansion of the robotics thesis for Tesla. You guys know it best, right? Elon Musk is a very brilliant person. He's a fantastic entrepreneur. when he is 100% laser focused on what he is doing. You might remember back here, he was literally sleeping in the Tesla factory for like 2 years, essentially. When he is 100% focused, I think he is one of the greatest CEOs and one of the greatest entrepreneurs of our era, right? That is very logical. But when his attention is too divided, such as it became after the acquisition of Twitter, thereafter, after his implication into the political sphere, well, now you can clearly see that the impact to Tesla's share price has been a whole lot of nothing. And Tesla shareholders have been waiting for gains now for the past 4 years. We have not seen gains. Yes, I agree the share price now is higher than where it was at some points throughout these lows, but still, it is a distraction, and it does obviously, everything he's been doing politically does alienate a lot of his customer base across different demographics. First the left, now the right, then Europeans as well. So when does it stop, right? Obviously, this has been detrimental to the brand, and brand perception is very, very, very important, guys. It's extremely important, right? So that being said, the damage was done today on Tesla, 7% to the downside. I don't know if it's going to continue. Obviously, I don't have a crystal ball, but as we can see right now, the bulls are trying desperately to defend this location. We are now closing below the 200-day EMA again. Into support, 300 down to roughly 260 is the range. It is very good to be able to play the volatility. A few of our Discord group members were able to sell some puts well below the market today for the Friday close, and that's fine. If you want to play the volatility and sell options and you enjoy playing Tesla, that's perfectly fine. But I also understand if you absolutely just don't want to touch the stock at all. If we're looking to swing trade from level to level and looking for this pattern to tighten up, if we wanted to take a swing trade here long from short-term oversold conditions, the 1 hour is oversold, although we don't have the trend, the 1 hour is oversold, the 4 hour is very weak as well. We're coming up into the final stop loss location. If we wanted to take a swing trade long from here into resistance, which is 340 to 360, the stop loss would have to go below here, 274, because it stands to argue if you lose this, you lose the weekly uptrend, it goes into a weekly downtrend, and you might just be facing more monthly consolidation, and the monthly lows are all the way down there. So it could do something like this, essentially is what I'm saying, right? So keep that in mind. Tesla has earnings coming up at the end of the month. We'll be curious to see how much the political party detracts from Tesla's share price again. Moving on to Palantir right now, 3.54% to the upside. And the bulls coming back in a very nice fashion. After last week's declines, we are now finally starting to get a little bit of an upswing on Palantir stock. That being said, who is in control? Well, we lost the daily uptrend. The bulls now have to do a lot of work to get it back. You need to set up the highs, the higher lows, and the higher highs to get the daily uptrend back. We lost it. We knew that when you lose the daily uptrend, that is synonymous with weekly consolidation. 2 weeks of weekly consolidation almost brought us into the support range, which is 125 to 120, but not quite. So we will see if the bulls are poised to go on another expansionary leg or whether we consolidate. Palantir right now for me is not a swing trade long. I'm also not adding more shares. You guys are free to do whatever you want. However, one thing is for sure, if we get another leg of downside on Palantir, as I was saying in yesterday's top 5 option video, if we do indeed visit the lower 125 to 120 with some good volatility, an upswing on the VIX, I might be looking to sell some options down below here on Palantir to make sure that even if I am assigned, I'm getting the best possible price and being able to play the volatility. Moving on to SOFI right now, 3.61% to the upside. SOFI, Palantir, and Uber not caring what the market was doing today. SOFI at this point just going for it, right? It's always the same on SOFI. People only get attracted to SOFI when it starts having the exponential moves, but it's the same thing for a lot of stocks, right? Robinhood gets a lot of attention here, maximum mind share here, but all the time when it's down here, not too many, I would say like 30% of all available traders are looking at it, 40%, 50%, and then it gets to be like 70, 80% of all people in the stock market start looking at something. That's what happened. That's what's happening with SOFI right now, right? Down here, maybe 30, 40% of people are looking at it. They're like, oh, I'd rather SOFI prove something to us. Gets up here, 40, 50% of all people in the markets maybe are looking at it or see it on their radar throughout the days as it starts expanding. Now that we're at the highs, Now, everybody wants a piece of SOFI, right? It's just normal market psychology. Every single stock, every single time, it's the exact same thing. That being said, who's in control right here? It is, of course, your bulls looking very good. Higher lows are set. The new higher lows right now at 1734. Any pullback looking for a new higher low for possible further trend continuation. And in the event that we undo this entire move and go into consolidation, just understand what's going to occur right here. It is the weekly timeframes that will come into play. We are just looking at that point for a weekly higher low, and it's all the way down there, guys. Anything above 1282, looking for a weekly higher low for further trend continuation. At this point, 16 to 14 is starting to get a little bit far away. So you would probably be targeting these guys in the 17 location for a likely area where you will find your next bull reaction to the upside. Upside targets, guys. There's not much before 23, 24, so keep that in mind. I'm not saying it's going to go there in a straight line, but that is the next upside target. Even if we do it in multiple legs, your next targets, guys, are at the mid-20s, 23, 24. Moving on to Uber right now. Uber, 3.26% to the upside, looking very good. On the days when Tesla goes down, Uber tends to rally. So that being said, this was a very nice bull flag. We were commenting on this last week to where there's a very good probability of this bull flag breaking to the upside and going for the $100 mark. And that is exactly what is happening right now. No swing trades on for me on Uber right now. However, right, if we do pull back looking for a higher low, anything above 90, looking for a daily higher low for possibly more trend continuation. That's if we don't get it done in one clean shot. The Uber bulls are looking very, very, very strong right now. This was a picture perfect textbook re-entry opportunity. Beautiful engulfing move, back test of the prior resistance highs. Beautiful back test, 3-4 weeks it allowed for possible entries. And now we finally get the expansion leg. So Uber is looking fantastic. I am not adding any more shares of Uber. I did most of my ads in the 70 to 60 locations down there. I was saying that in the lower 80s, it was also not a bad buy for a swing trade long or some additions. But now it's kind of a time where you have to ride your profits because we're in blue sky breakout territory. And now lastly, moving into TSM. So TSM down 2.4%, down with the rest of the semiconductor market. But we know that TSM has been performing very well recently. That being said, daily uptrend is still in check to the bulls. Anything above 221.80 looking for a higher low, possibly for further upside continuation. But if you give back this entire move, cut the lows, you open up the door for the daily downtrend. And if that happens, I just want you guys to focus on the same thing we've been talking about this entire video. The bulls have ran very hot on a lot of these charts. The higher lows on the weeklies are now farther below, right? 206.04 is going to be the higher low on the weekly. So keep that in mind. If you get a loss of the daily uptrend and a daily downtrend, and we go into a bit of a consolidation phase in the markets, we have a ton of support down here, 210 down to 200. This would be an area, if we pull back close to it, if we go down into the teens, right, 215, etc., I'll be looking for some short put opportunities, 210 down to 200 to play the eventual possible, not guaranteed, but the possible back test of this range, which would make a lot of sense in my humble opinion. Right now at 220, slightly above 220, the valuation of TSM is not so commanding. They also have earnings coming up in about 2 weeks worth of time. So keep that in mind. It might just be a question of if we consolidate into earnings with some tariffs or XYZ, right? If we see a consolidation phase in the market, earnings might just be the catalyst to turn everything around, as I do believe TSM's earnings, per their guidance in Q1, their earnings this quarter should be pretty darn good. Very strong demand, very strong margins, and the expansion profile of their fundamentals, at least over the next 2 years with that demand, is very good. Look at the EPS expansion and look at the revenue expansion profile as well. So I'm expecting good things from TSM. So we will try to get the timing down over the next 2 weeks into earnings. If we have a bit of a dip, you might see some swing trades from me into earnings, right? The last thing I want to do is if the stock keeps pushing up in earnings, is before earnings, take a position here and go for the absolute moonshot, right? I'd rather benefit from a consolidation period in the markets, build a position around support, going into a bullish leaning bias for earnings, and take a swing trade like that. In my opinion, it has better probabilities for some follow through. That being said, that's everything I had for you guys in terms of our market rundown. Hopefully you enjoyed. Now let's dive into some names of our biggest gainers and losers of the day. All right, so if we take a look at our little list right here, we're going to take a look at the biggest losers of the day first. Tesla we've already done, but Elf Beauty. So I'll let you guys know where I'm interested in playing these stocks if they do consolidate a little bit more. Elf Beauty would be a short put opportunity play for me, lower 100s into support down here, 105 down to about 89. If we get some nice pullbacks, Elf has some good volatility. If we reach the teens 115, etc., you may find some good short put opportunities in the lower 100s. That would be an area that I might be looking to do two things: either write some short puts or also go for more swing trade longs. Any pullbacks on the monthly, in my opinion, will be dip buying opportunities for the expansion thesis of the company in the longer term. SOXL is a trade that I took today. We were covering it in the top 5 options video yesterday. I'll be targeting 22 to 20. I'll show you the trade that I did at the end of the video, but this is a nice little short-term pullback area that I'd be looking for on SOXL, looking for the weekly higher lows, possibly for more expansion. So I want to play that lower $20 range. ARM is a company, unfortunately, guys, that I will not be playing. Even around 150, we did the valuation after Q1 earnings. It is extremely expensive. In my opinion, there are much better plays to be had in semiconductors. But if you're looking for some short put plays, if we drop a little bit more, I would be targeting the lower under 130 to 120 range, all the way down there. I know it seems like a lot, but semiconductors move very fast. A couple more percentage points, 4 or 5% more to the downside, could just get you those opportunities if ARM is something that you do indeed like playing. Rocket Mortgage was on the top 5 options list yesterday. That being said, it opened up some beautiful opportunities today. You can clearly see 13 to 12.5 is a nice area to possibly be writing some short puts, but I'm going to stagger my orders. One contract at 13, and if we unravel, because yields just keep going higher, if we unravel, then my next order gets at the $12 range, closer to the support. Keep that in mind. TEM, same concept. I'm a big fan of TEM. Lower 50 range, right? 50 or below is going to be my target range. You can clearly see this is where the entire lower bounds of support are. I know the box is there, but you can make it a wider box overall. That being said, 50 or lower is something that I do enjoy playing on TM. I do have an active trade on that one. I'll show you that one at the end of the video as well. It's not quite below 50, but it is right down below here at 52, which are some of the areas that we've established since the April ending period. FSLR, no trade for me right now. However, if I did have to play short puts on this one, it would have to be all the way back down there. I know, sadly, 150. It's looking good right now. The bulls have recaptured this in an engulfing move. Now looking to set some higher lows into some expansion. If we pull back there and you guys are interested in FSLR, short puts in the 140 range would be preferable for me. That's pretty much most of the ones I did want to cover. Special shout out to CoreWeave today. CoreWeave offered opportunities all day. We covered this one on the top 5 options list. I was saying, pay attention, guys, to the 130 strikes or lower. 130 was available all morning for the 0.5% rule, and by the end of the day, you would be able to close this trade for 80% profit. But if we're looking for expansion, if you're looking for the expansion out of this zone, very clear stop loss target, guys, 142. If you lose 142, you invalidate the entire area, right? That being said, that's on the daily chart. This would be just weekly further consolidation and a bit more monthly consolidation too. So you do not want to stick around if you break that level, because then you might be coming down a little bit further to the 130, 120 range. But the entire time that it has some good volatility, I'm a fan of playing short puts at the lower level. That's everything for our list of decline. I know there's many more, guys, but there's only so much time I have on the video. We'll try to cover a lot more of these in the next few videos as well. To the upside, Circle looking very good. We were commenting on the fact that Circle might just be a very nice breakout trade. They were recapturing these short-term timeframes, hourly uptrend breakout. So even early into the morning at the open, guys, it was a very nice location. Stop loss, of course, is where the line is. I put this one on the chart when I did last Thursday's video and also hinted at it in the top 5 yesterday. This would have been the stop loss area. So now if you're into profit, well, your first target is coming up, 220, and then of course you go for the absolute moonshot over and above there, but looking very good, guys. Now, if you are in this one and you did enter over the course of the morning, the stop loss can be moved to break even. Fantastic little breakout, or rather trend shift change, right? Daily downtrend. Now looking for a bit of expansion, looking for the weekly higher lows, and looking for another leg of expansion. So very good there. Rocket Lab just did not give any re-entry trades whatsoever. We were looking for a bit more weekly consolidation, maybe back into the 31, 32. That would have made sense. Here, you're just kind of buying and crossing your fingers for the daily uptrend continuation, even though we're already in overbought conditions. So not one that I participated in myself, but congratulations to all the bulls that have built positions maybe down here and that are still holding that trade overall. Your profit targets have to be psychological levels at this point, 40, 45, and then 50. Oklo, not performing too poorly, coming nicely into our support range. Daily downtrend, slowing down into support. Might just be looking for a bit of an upswing right there. So in this position, guys, In my opinion, below the support range would be a stop loss 46, and then you're targeting kind of like 73 to the upside. It's a decent trade, but you're going to need a few weeks of expansion for this to happen, of course, but not a bad proposition overall. If I'm looking to write short puts, I need more downside, and I need to be able to write down here the $40 strikes, right? That's for people writing short puts. Swing trade longs with shares or call debit spreads is a different entry criteria and stop loss than just selling short puts, so keep that in mind, right? Roblox. This has been one that's been flying under the radar. Look at the move that Roblox has made since the Liberation Day tariffs on April the 7th. That is an absolutely ridiculous move. In my opinion, though, very overbought on the weekly timeframes right now and starting to be overbought again. This is divergence, higher highs and lower highs on the RSI. Eventually, this move will taper off, but congratulations to everyone participating right there. No price action or clear entry zones for me at this current time. And some of the China names were performing well today, right? Baidu getting a nice little uptick by about 4%. KWeb, the entire ETF, was up a little bit today, 0.71, but still no clear breakout on the China names. You know that Baba has not been having the best time overall. They're still in consolidation mode too. But today, nice to see a few of them starting to uptick, guys. Sorry for my voice today in the video. I don't know if you can tell, I got a little bit of a cold. I know, a cold in summer. What a disaster. Moving on to Tractor Supply Corporation right now. Another trade that we've been looking at for a possible breakout, retest, and run. If you find it retesting down here, lower 50s, it might just be a re-entry opportunity. Overall, it kind of looks like, well, it doesn't look exactly like, but this chart gives me, it's reminiscent of kind of Chipotle. Chipotle consolidated a little bit. It's getting a nice breakout here. The price is the same. Maybe that's what it reminds me of it. Get a retest down here of Chipotle. Not the worst in terms of like a swing trade long or selling puts below the market. Same thing for TSCO. If you get a bit of a retest and you enjoy playing this company, not a bad opportunity for some short puts down there or a retest for possible swing trade longs and going into the highs. But if you're just buying here, you're kind of buying into resistance. So not my favorite trade overall. And that's pretty much it. We've covered most of the other things. Shout out to Affirm. Affirm's just been kind of moving along, right? Even if the markets have not been favorable today, Affirm is still up about 3% right now. The next profit target for Affirm, for anybody holding, would be that 82 mark that we did set earlier in the month of February. Affirm's still with a lot of upside potential, in my opinion here, especially if we are into a scenario where there's no recession. This one could be one of the biggest winners of the consumer discretionary trade, but also interest rates coming down. So it's kind of like a trade that has two aspects to it. Consumer discretionary spending, if that goes higher with a no recession trade, the tax cuts, et cetera, et cetera, et cetera, Affirm could do quite well. But if interest rates come down, Affirm's going to do well and get some love from there. So you might just be looking at a situation where this thing has two tailwinds that could possibly come in its favor in the event of a no recession scenario. That's pretty much all the ones that I wanted to cover today. As I said, there's many more, but those are just a few that I wanted to cover with you guys today. In terms of the trades for the portfolio, we'll keep it very brief. So no changes to my long positions in terms of my directional trades. However, we do have some new entries to the wheel positions. So CoreWeave was one that we wrote last Thursday. I showed that to you guys on the Thursday session video. Now, that being said, CoreWeave was closed today, 80% profit overall, midway through the afternoon, closed it for 15 cents. We got into it for 70 cents. Very nice 80% profit, just holding it Thursday into today, right? That being said, we also did new trades. Rocket Mortgage, $13 strike, 10 cents. We talked about that in the top 5 options yesterday. TEM, that was also a trade. Sorry, this one was on last Thursday, but I was telling you guys it was available today. As a matter of fact, it was available all day. The exact same strike for either the same or better premium than I got. TEM was another trade that I put in motion last Thursday. Now today, it's been roughly profitable for us. I'll show you that in just a few short moments, but just recapping the trades here. BITX, 48 strike, also done on the Thursday session, 29 cents for the 48 strike. That one is still running profitable right now. HIMS, this was a new trade as of this morning. 34 strike when HIMS was down, 9:46 a.m. We got the 34 strike for next week, 2 weeks, 22 cents. I've been talking about this HIMS location, right? The whole lower 30s. And I was saying, if I can get into my support zone, I'll probably fire off a trade or two, which is what I did today. AMD, also on the top 5 options list yesterday, 130. The expected move for AMD this week was 133. I'm more than happy playing the support range. I'm now playing the shallow end of it, 130. But if you guys want to be a bit more patient and wait for better strikes, such as the mid 120s to free up, that's up to you. We got 66 cents, so 0.5% for the week on this one. Google, 172.5 strike for the Friday session. 87 cents for that one as well. Take a look at Google right here. So Google, it's kind of the midpoint. I played the midpoint. Now, if you wanted to be more patient and play support, you would have to wait for 170 or lower, 170 or 167, right? 167 is also obviously the perfect one, but if it never gets down there, well, then you'll never have the opportunity to trade it. I went in the middle, being a little bit more aggressive with it. It's not even that aggressive to begin with. I don't mind being assigned here, even if it's at the midpoint, but if you want it to be technically correct or technically perfect in terms of the strategy rules, you would want to be a bit more patient for down below there. I went with the midpoint. And lastly, we had SOXL. I played the $22 strike for July 11th, the Friday session, for 15 cents, just reiterating the fact that I do want to play SOXL at the lower end of this range down there. That will be an additional, from today's sell-off, if I get assigned at 22, that'll be an additional 12%, which means that SMH or SOXX, the semiconductor index that this is based off of, right, needs to drop about 4% by Friday. Somewhat unlikely, but if it does happen, I'll be gladly picking up some shares overall. In terms of the portfolio, you can see all of those trades right there. The AMDs are slightly underwater from where we got them. BITX is still profitable from last Thursday. Google is profitable from where we got it. We got it at the low of the day pretty much. HIMS is profitable from this morning. Rocket Mortgage is slightly underwater, but not that much. And we also have SOXL, which is roughly in line with where we got it. And TEM, which we got last Thursday. This one was profitable the entire day. I could have closed it for 50%, but I'll hold it until the end of the week. Those are the 52s. I did not touch any of my leap call contracts, didn't touch any of my directional trades, all of which I covered in last Friday's video in detail. But of course, the portfolio is down today because all of our directional longs, which are leveraged bets using options, were all down. So that is the portfolio and what we have into the rest of the week. I still have a decent amount of buying power to continue to sell options below the market. So hopefully today's video was educational for you. That's everything I had. If it was, consider dropping a like. Would appreciate it for the growth of the channel. Also consider subscribing to the channel if you're new. Would love to have you back. We do these every Monday through Friday after the close. And lastly, if you have any questions, please feel free to leave them down below in the comments section. I would love to answer your guys' questions and help you guys out as best as I can. And last but not least, if you guys ever wanted access to all of these trades in real time, if you want to participate in a community of traders and investors such as yourself, where we trade the markets every day, but also focus on long-term portfolio building and long-term wealth creation, two portfolios, the long-term portfolios and the trading swing trade portfolios overall. You get access to all my trades here, just a lot of the trades that we've been having over the course of the last couple of months, right? So just showing you guys a couple of trades. The green check marks are the wins, of course. The red little circles are the losses. So it's just a few of the trades, right, that we've made over the past 2 months. You get access to all of those. You also get access to any live streams that I do every Monday through Friday for about 2 to 3 hours at the open. I trade live and take all of your questions on your stocks, your options, your long-term portfolios. If you can't be there, they're always recorded. You can watch them after. You can ask me all your questions in our chat rooms throughout the day. You get access to our private video section, which is the educational section, where I go over many different trading strategies for leap call options, call debit spreads, put credit spreads, how to build long-term portfolios, how to manage trading portfolios as well, technical analysis, fundamental analysis, all different educational topics, which our members have been finding good value in. And you get access to all of my watch lists. You can copy paste all my watch lists, but not only that, you get to copy paste all of my chart layouts. So whenever you see support and resistance boxes on the charts and fundamental analysis, you can just copy paste everything. It takes 2 seconds, a couple clicks of a button, you get all my watch lists, and all the charts will look like this, and everything pasted onto them for you. Just an added benefit for our members. If that interests you, the link to the Discord is always down below in the video description. So hopefully I see you in there soon. And if not, I'll see you guys right back here on the channel. That's it for me. Have a great rest of your evening. Take care. See you tomorrow. Good luck and peace.